And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, top-down analysis style, going through the charts, the indexes, economic data, corporate earnings, anything really grabbing our attention we think is relevant, important to the financial markets, break it all down and hopefully help you guys better run your daily routine. And welcome back. Hashtag Team Tackle in the chat as you're coming to the show. Let's keep the chat lively and fun here today on a Monday. And if you are brand new to the channel, watching this for the very first time, or you've just not done it yet, click that subscribe button, click the bell, and come back and join us on a daily basis. I got a fun show planned for you here on a Monday, kind of an earnings preview day. You know, not a lot going on in the markets today, but there's a lot going on in the markets this week. A big roundup of earnings. About a third of the S&P 500 companies will be reporting, including Tesla after the bell, Apple, Microsoft, some of the other big names later in the week. We'll get Coach Matt and Mark's take on what's going on across the earnings spectrum, as well as a technical read as we are pushing towards a breakout. Matty, first, how are you doing today, sir?
You know, Tim, doing absolutely fantastic. Excited to be here with the crew to break down the market activity coming into the week.
And Marky, how are you on a Monday morning?
Listen, my cat ignores me all morning, and then the second I sit down and get talking here on the headset, she's like, "Oh, he wants to. I need to bother him now." But you know, I'm in a good mood. Like we have a nice rainy day here in Utah. I love the rain. You know, I don't know. I'm in a very zen, happy mood. I love the market conditions. I think this is a really healthy market right now, heading into a big catalyst week. But we'll get into that here in a second.
And one thing I'm excited about today, and I'm glad that you are in a very zen-like good mood. You always want to trade in the zone, as old Mark Douglas wrote in his famous book with Mindset. But, you know, Mark, we got a new segment here planned later in the show called the Commodity Corner, where you're going to take a look at one area of the commodity markets and break it all down, kind of give us some insight into that space in the market. And first time we're going to be doing it, but I'm excited. I think we're going to be looking at oil today. Is that right?
We're gonna at the end of the show, we're gonna talk why I am still a believer in energy stocks.
Fantastic.
And analyze oil, take a deep dive.
Fantastic. Looking forward to that. But let's start with broad market analysis here. Matt, you know, obviously the S&P held up last week. You know, 2 weeks ago, as we were just kind of at the top of the range, we were riding the lightning, doing all that kind of thing. You had made a comment, well, it can base as long as it wants to. It can hang out as long as it wants to, as long as it doesn't change the core nature of the pattern. It hasn't done that. And we're heading into a very busy earnings week with really good technical conditions, quite frankly. What are you reading in the charts here?
Yeah, I mean, you got what you wanted for when you were coming into last week, and sometimes it's good just to take a look at the picture last week. You know, you're coming into the market last week, you're fairly aggressive above that 20-day moving average, slow, methodical type market as we were entering into earnings season, and so you're certainly elevated as you were coming into that very important earnings week last week. Obviously, 2 weeks ago, we started off with the finance. We came back last week with just a tremendous amount of more conservative type value names, dividend payers out there as well. So not a lot of your Apples, your Microsofts, your Googles, your Amazons, or your Teslas tonight. Those are some of the big names that are coming out this week. None of that last week. And so last week, you're looking at the market and you're saying, okay, over the next 2-3 weeks, we got a lot of earnings coming out to us, but we're looking at this technically and we're saying, okay, you got to come out and support the price. You got to come out and your numbers got to support this type of price appreciation. And you're looking at last week, not as coming into that week with a bunch of those value type names. You're not looking at last week as that catalyst. You're looking at last week as that can this week in earnings, can it solidify this price action? And then you fast forward a week on the backs of last week where 84% of companies reported better than expected EPS. Right now, early into earnings season, you have 77% of companies beating revenue expectations. That has contracted a little bit from that very hot start to earnings we had out of the financial sector, where 84% of those companies reporting in that first week were reporting better than expected revenue numbers. And so you had that week last week where technically you're a little bit overextended, your range up in a lot of your components of the market. And obviously the market itself was overextended from a technical perspective. And so you're looking at this previous week, when you had the chock full of that of the value type names, and you get that consolidation. And yeah, Tim, I said it can consolidate a week. It can consolidate 2 weeks. As long as it does not violate your intraday analysis, you're perfectly fine. And when you look at that from an hourly chart, you see that hourly chart over last week, and you look at it, you look at an environment where you have a double bottom, double top, you have an increasing resistance level coming into the futures market on Sunday, coming into the cash open this morning. You have an increasing technical support level coming into a horizontal breakout. And when you're looking at that, and when you're looking at that from the price action perspective of the last week, you got a very clean high base scenario that's threatening another breakout, and you're doing it in the time frame where you have companies that are reporting that truly could be catalyst. We weren't expecting a lot of stocks last week reporting to be a catalyst that drove the market. But can the names this week, such as out in the material space, let's take a look at these from a sector perspective very quickly. Out in the material space, we have a 10-point ranking. One of our highest rated sector in the market right there in materials, 10-point ranking. We've had some materials already report here, but you have Newmont Mining, a very important company in the material space, gold mining company, one of the most important gold mining components reporting this week. You have Sherwin-Williams, one of the biggest chemical companies reporting this week. And so you have a technical component where you have a nice trend, very consistent pattern, nice high base, and you have a breakout here with some catalysts that could see, on some positive catalysts, that is. I mean, we haven't seen the data come out. We do have 180 companies reporting earnings this week. We got to see it. We know the catalysts are there, but we got to see it. And right now, early on in the week, we're seeing it a little bit. You're seeing that breakout out of a clean high base. In finance, you're on the backs of the financial reports. You've reported, for the most part, all your financial components. We're through a lot of the banks, the brokers, the money centers. We're getting in a little bit to the credit cards and the insurances, but you're on the back half of your financial reports, if not almost complete with your financial reports, and you're looking at a potential breakout here. And you have Verizon, MasterCard this week, but you're not. But your confidence is building in the financial space. You're looking at a very clean environment. Your post earnings. Earnings were really, really robust out of the financial space. And so you're looking fairly healthy there as well. And so when you're looking at a lot of these sectors, our rankings last week, Tim, we kept chalk a lot last week. We kept chalk in, I want to say 8 of the 11 sectors. We kept chalk in. 2 upgrades we had in real estate and healthcare, really just to kind of to solidify the ranking against the momentum that we've been seeing in real estate, the momentum we've been seeing in healthcare here, but the momentum we've been seeing in real estate. You got to love that type of momentum. So you did see a couple upgrades there in real estate. You have a couple important reports this week out of American Tower and Public Storage. And so this week you're coming into a market environment, and I can look at this on almost any sector. You're coming into a market environment where you have clean technical environment. You've had the consolidation that you needed to happen to have a clean technical environment, and you're right in front of some very important economic reports, very important earnings reports, and political environments that truly could see a catalyst on a breakout. And the data we're seeing so far, it's early in the week, but it's all positive so far.
Yeah, and obviously it's going to get busy as we go throughout the week. But the sectors, a lot of that coming into the weekend, Matt, we had to respect the moves out of healthcare and real estate. They've been juggernauts. Of course, they're going to catch an upgrade after the moves that they've kind of sustained there. Now, when we're looking at the defensive areas, though, like you mentioned, staples are off here a little bit here today. But everybody should go and review that full newsletter if you ever want the full sector rankings, the full analysis behind it as to why the coaches did what they did. Marky, as you're looking at across the markets here, what are you seeing in the technical conditions, including the sectors, if anything grabbed your attention?
I mean, I just loved how that support level that formed last week. And, and I was talking about this with our pro members last night when we do our weekend prep class. Heading into last week, I hate those parabolic runs. We saw one in May. We saw one in August of last year, and they both ended with really big, huge, massive red candles because no support gets formed on the way. If anything spooks the market at all, if anything makes it jittery, then, well, things can go bad really, really, really quick. And so heading into last week, I was a little bit worried that you would have a situation, no support form, big, really for the broad market, that was a really massive run. And we started the week off jittery, right? Monday, yep. Tuesday, but then that intraday support. And we talked about this a week ago today on the halftime. It's like, watch for intraday support. And when it forms, and if you get some tests there, and that's what happened, then that's a good trigger to, if you've been waiting for that top-down approach, that top-down trigger, and you got that support stuck on Wednesday, come down on Thursday, that was really, really healthy. So now heading into the week, you had a really clear support level, you had a really clear resistance level, and there's that rising 20 acting as a secondary support lining up. And so even if the market got spooked to start the week on a Monday, on a Tuesday, you had what I call a double band of support forming, horizontal support on the intraday chart or on the daily chart, and a rising 20 lining up with that. That's a really good support level. It's going to take something to really spook the market to break that in the short term. I thought last week's price action was even though the market was down a smidge for the week, I thought that was a massive win for the bulls. You now have a clear breakout level ahead of a lot of catalysts. Mm-hmm. The market feels very healthy. Now, one day, there's all kinds of things lingering in the background, capital gains tax, Fed accommodation, 10 years yields, and that's one day, and maybe this summer we revisit some of those themes. In the short term, if companies deliver on earnings, as long as Jay Powell doesn't put his foot in his mouth Wednesday afternoon, it's really, really healthy price action right now.
Companies deliver on earnings, nobody's going to care about the 28% they got to pay on taxes.
So,
yeah,
right. Just Jay Powell, don't say something stupid this week.
Well, you can't ever promise that.
That's asking a little too much.
Dude,
that doesn't mean it doesn't mean the market's going to sell it.
No,
I mean, it's a good week
you just
for a
said
Fed
something
meeting,
stupid.
Right?
That's all you said.
It's a good week for a Fed meeting, though, because if whatever the Fed might say, if Apple kills it, you got companies across the spectrum, right? Caterpillar, you were highlighting some of them. Visa, the oil.
You have what you asked for. That's what you have.
Mm-hmm.
You have what you wanted coming into this moment. That's what you have.
You did. It's just a really good environment.
You don't know if it's going to play out. We don't know.
This environment
hold on. But the reality is, this week was going to come one way or the other. You were going to have this week where you had 180 S&P 500 components reporting. You were going to have this week where you had the central bank reporting. You were going to have this week when you had, key economic reports coming out. You were going to have this week when Biden gives his first congressional speech. This week was going to happen regardless of whatever the technical environment was going to be, one way or the other.
Mm-hmm.
But you gotta like the what the market has done in front of a potential catalyst.
Mm-hmm.
And that, to me, although it's certainly not as important as the price action and the reading of the price action following these catalysts, but again, if you had a market that was just tanking last week, or if you had a market that was completely just, methodical grind up last week, you don't have a key technical environment where you can trigger and see a new leg. And so I do think this is one of those environments where you've had the consolidation, you have the technical environment, you're in front of a catalyst that certainly could drive this market to another leg. And very similar to what we were talking about a month and a half ago with in multiple time frame analysis, once those time frames get aligned, a lot of times this is when you see those legs up where you have multiple time frame analysis and then a catalyst comes. Last time we were doing this, there was a mixture of all of these different things. But once those markets got aligned, and you can kind of see that right here, and once they started getting aligned, I'm not going to do a deep dive. We were all over this during the moment. Once it got aligned, you saw that breakout, you saw that leg. When you're overextended like you are here, and all you do is methodically just grind, well, this is what you get, this type of trading range where it's just slow, methodical. And if you guys remember, ever since this right here, I said, okay, you're going to either look at this as a continuation, depending on if you see this as a high base. I did not. I saw this all as overextended. And so you don't love overextended trading environments. They're not great triggers. They're not great new positions. You're stuck managing slowly, stop loss positioning. You got a great technical environment in front of major catalysts that absolutely have the ability to see a market drive again. And I think you got to be at least excited about that. Now, again, we got to see that. You got to see Google report. You got to see Tesla report. You got to see Apple report. You got to see Amazon report. You got to see, and again, see is the market response to these things. You got to see Biden's first congressional speech. You got to see these things. That's what those catalysts are. They're there to make you aware, so because the market could do something in this environment. You don't blindly buy in front, but you're ready to trigger, and you're ready to apply your systems. I think we're in a good environment for the market. Market wants to buy here, and it's a little front running, but you got to love the price appreciation coming into the market today in the face of a lot of, quite frankly, a tremendous amount this week.
Yeah, a lot right in front of us, no doubt about it. And I can't wait to see how the market responds to many of these different things. We've been anticipating it, right? I mean, no knock against some of the earnings reports we got last week, but they're not Google, Apple, Amazon, and Microsoft. So
listen, we all love value, right? We all love value. But value is not going to knock your socks off and take your breath away. That's not what value is. Apple can, Microsoft, Amazon, Google, Tesla, these names that are reporting this week. And again, you look at the sectors here, and you got, we're going to do a little deep dive in commodity corn later on today on the energy space, but this is the week you've been waiting for in energy. Mm-hmm. Right. Yeah. I mean, yes, it's technically challenging here, but I agree. I'm pretty certain Mark's thesis is going to be, I still believe, right? That's what you call it. Why I still believe in the energy space. Well, I still think technically you should believe technically. Yeah. Short term wise, we got a little bit of struggling and complicated price action. But when you're looking at this on a weekly chart, you still got that as a bullish retracement on the weekly chart, and you're still above 45, which is a very important support level. You're still above your weekly channels on your 20 SMA as well. So, technically, yes, the short-term analysis is complicated, but the long-term analysis is still intact in energy. And so this week was that week, right? We had a few energy components report last week, and what did we say? Doesn't matter till we see Exxon.
That's right.
It doesn't matter till we see Chevron. I mean, so really big week for a lot of areas of the market. I'm excited to be here all week long to break it down with the crew.
Yeah, and at this point, bringing up energy, let's flash right into the commodity market and take a look at crude oil. Mark, I know you're going to be doing a deeper dive a little bit later, so I'll just get a quick technical read from Matt. Matt, not much to update here today from Friday, frankly.
Well, no, there's not. There's not. I hesitated and laughed a little bit. It reminded me of a conversation we had in the scouting report meeting on Friday when we got done with our rankings on crude, and I sat here on this chart for, it felt like 5 minutes just staring at it, and everybody's like, Matt, you there? Matt, you there? Matt, you there? I'm like, don't you guys kind of like that retracement? Just kind of like that retracement. And I do. I like the short-term bullish retracement. It's similar to, it's not as similar to my call on GDX, Tim. Mm-hmm. When we were front running the gold reversal, that GDX 32 increase, that thing spoke to me. I mean, when I saw this form on the chart, guys, it was like the chart whisperer and is like, nope, nope, nope. That means far more to you than it means to anybody else. And so I had that type of response to that increasing support on GDX. And a lot of it was this major support that gold was forming coming into around that. And if you'll take a look very quickly at gold right there in that 1680 ballpark. So I saw the momentum shift. And then once I saw GDX increase support, I was like, yeah, the buyers are telling me. The buyers, we're united. Buyers unite in that moment. So it's not as strong as that moment, but I do like the increasing in support. And since you're at the top end of the channel, I wouldn't call this reversal, but if it was at the bottom end of the channel, I'd be like, all right, let's front run that that 64 breakout. So I do like it, but overall, you're still in some degree of neutrality from a trend perspective. The increasing in support puts pressure to break out of this short term and retest the 66 handle. All of that is not great trading environments, but it's good for energy. It is good for energy, and it does solidify to a certain extent that energy argument on energy stocks catching up to what has happened to crude, the stabilization argument in crude, and how that helps energy over time with the average price of crude going up over time as the economy opens up and that vaccine gets distributed all around the world. And so I do think it's healthy to solidify some of those macro type arguments, but as for a trigger and a trade, no, I don't think it's there. Although I've been staring at this chart a little bit too much lately.
The longer you look at a chart, sometimes you can start to see something maybe that you didn't see the very first time. It's not necessarily
we don't want to talk about all the things I've seen in charts. I've seen some things in charts, but it is speaking to me a little bit, and I do think it's healthy. I just don't think it's tradable because of the overall trend. Cash flow, other systems, I don't have an issue with. I'm talking directional.
Quick peek at the dollar next, then Bitcoin, then we'll get into some stock news. There's a couple of corporate items I want to talk about, one or two earnings reports potentially, but the dollar fading here. Busy week for economic data, not just the Fed meeting. We got a preliminary advanced GDP number on Thursday. We've got PCE numbers on Friday, but that Fed meeting is going to be the important one on Wednesday. Obviously, we'll be talking about that a lot tomorrow and Wednesday when it's happening. Anything you want to add to the dollar here, Matt?
No, not really. I mean, we downgraded the dollar as expected. The low base got clipped on Friday with the breakdown. We did have a fairly substantial decrease in the dollar in our rankings. Check out the Forex report for further analysis on that. But with the dollar breaking support, obviously other currencies are going to be more in favor, and we're definitely seeing that. And quite frankly, it's going to be a benefit to gold as well.
Yep, I agree. All right, and then lastly, Bitcoin here having a nice little bounce, at least from the lows that it had hit. Pretty good fat green candle. In fact, it's enveloping the previous candle.
I love Bitcoin. I just love it.
What do you love about it?
I love it. Right now. I as long as the United States or European Union or China does not ban Bitcoin, as long as companies keep adopting it. JP Morgan out again, warming up now, which as a big,
I'm just warning you. These are trigger words with JP and
I know. And the only reason I bring it up,
I'll have things to say.
JP Morgan did about 17,000 reports in the last year on why Bitcoin sucks, and to have them say positive and warming up to it.
Hold on. It's only because they've accumulated enough that now they have to talk their
exactly
book.
Right.
Okay, we know what they did. We know what they did. We know what they're doing. And JP, you're not adding to the conversation. We all know you for who you are, JP.
I'm never going to see 30,000 to execute the thing I want to do with Bitcoin.
Oh, don't say that. Just don't say that.
I will.
Don't say that. You're not there. We're not there. We're not there. I said this in the scout report when we were ranking, and I'll say this today after the 5% upward. I will not be surprised in any capacity if Bitcoin is 65 by the end of this week. I won't be surprised if it's 35 by the end of the week, and I wouldn't be surprised if it's 50 either. There's no trade here.
Yeah, there's nothing in the short term.
There is zero trade here.
Oh, there's
in
zero trade.
Any capacity. You have zero supporting technical analysis to justify any trade in any direction. You need, and this is just my stance, but technically this is a 100% coin flip scenario, and there is zero edge in trading at all. Take it off your radar until there is.
Oh yeah, and I had similar when I analyzed into the commodity report. It's like basically I said before you get a pattern you can believe in, it might be 6 to 8 weeks. It could be a very, very long time. And yes, if it V shapes and goes up,
you're going to miss it.
You're going to miss it. But for
as a trader,
listen, I've learned from Tim that these hands are made of diamond when it comes to my existing Bitcoin holdings. But for new positions,
I'm not saying you capitulate on existing holdings. I'm talking new
patterns, man. It could be a long, long time before you get any semblance of technical cohesion again, and that sucks. But it is what it is.
Well, I don't know when you're going to have a really good chart with a really good clean trigger on Bitcoin. I have zero clue where it's going to form on the chart. It could be a double bottom, could be a double top with an increasing in support. I have zero clue. What I do know is it's not this week.
Yeah, it's going to take some time to work itself out.
It can't be, because if it does recover if it does recover V-shape outside of day trading, there's no swing trading technical system that's based on that. Because all of those get destroyed over time in trying to buy against this type of volatility.
Yeah, the pattern's blown up in the short term. There's
patterns destroyed.
Yeah, not a debate about that. You mentioned JP Morgan, Mark. There was a time when Jamie.
Speaking of patterns getting destroyed, Tim.
Yeah.
Staples. You got to recognize when trends are over. Failed breakout, failed support, violation of trend pattern. It's over. Staples is neutral.
Jamie Dimon once threatened to fire any one of his traders who traded Bitcoin. Mark, I think
but he bought it 2 days later. Like literally, we know what happened. He came out, he threatened, literally in a very public statement, Mark, he said, if I catch any one of my traders trading Bitcoin, I'll fire them. 2 days later, a report came out after Bitcoin dropped 1,000 points. Now, mind you, this is back in the old days of Bitcoin being 6,000, went down to 5,000. JP bought it at 5,000. We know what the banks do.
They lie,
they lie, and they lie some more. If they say they're not buying, they're really buying. If they say they're selling, well, just get scared if they say they're selling.
That's right. That's right.
They don't like to say we're selling.
They probably would not tell us that if they were.
They'll sell you their stock all day long, but they don't like to say it
while they upgrade it. All right, let's move on to stock talk next here and get into a couple of corporate items. Then I'm excited about this new segment we're going to be doing called the Commodity Corner here, and taking a look at the energy sector. Mark's got some things planned for us. Matt, there was a couple of companies with earnings, but we can start with either them. Albertsons, I think, was the only one that really grabbed my attention.
I got no earnings today, T.
ACI, Albertsons, they came out and they beat, but then the stock was down on it as well. Just market didn't react well, but there's nothing really there. Albertsons a dividend paying long-term.
I'll state again. We didn't have anything on earnings roundup today.
Yeah, there's not much there. Apple Computer, though, this is a good news story. I like it, at least. It's a good affirmation of what Apple's always going to be doing. They announced they're committing $430 billion in capital over the next half of the decade to build new facilities, train new employees, hire new talent, all that kind of stuff. And in conjunction, they announced and confirmed they're going to be putting one of their campuses in North Carolina. Obviously all those.
How many billions?
430.
That's 430 more billion to infrastructure and education than the U.S. government is.
At this point, I know it's a big number too. It kind of caught my attention, obviously. And this campus in North Carolina sounds like a very smart location. North Carolina University, Duke University, North Carolina State,
that's
all in
awesome.
That little trifecta. They're building a campus down in Texas as well, Austin, Texas, Matt. Apple, earnings this week. There's nothing here. There's a little base there, but you don't do anything in front of the earnings. Just another example of what this company.
Mark, at what point do we get to the United States of Apple?
Dude, Apple, dude, you never listen to anything I say. It's 23-32. It's Disney versus Amazon.
Okay, Apple gets beat in the war.
They get sucked up by the mouse versus the Bezos future cloned army.
Well, the mouse is going to need some heavy hitters in that war.
There will be two entities in the world one day. One will be Disney. One will be all governments. It's gone. They're gone. So Apple loses.
That's the Great War of 2033.
23-32.
300 years from now.
Yeah, no,
I don't have to worry about this for 300 years.
Oh no, we'll all be long gone. You know,
Okay.
But it's just how
I
it
was
plays
getting
out.
ready for the revolution like next year. Like, okay.
330 is what we're talking 300
Oh man,
years from now.
And somebody asked me, well, where's Tesla in this? And I was like, well, Tesla got absorbed by Disney in this along the way, and the mouse flies on these little Tesla hovercraft. You know,
dude, 300 years is too long. And
materials.
300. You got to be a part of this in your life, bro. You got to be fighting in this war.
Like 2070. Yeah.
This got to be like Demolition Man in 1996. You're only projecting 20 years. Like,
well, I mean, it was inspired by Demolition Man because there's that line in
Taco Bell.
It's like all restaurants are Taco Bell now. I'm like, that's
somehow,
how it is.
Somehow Tim took a very positive story about Apple and we turned it into something not positive.
Well, I was just doing some math here. 300 years in front of us is like 300 years behind. Same the Dutch East.
Dude, that's the East Indian Trading Company, bro. Like,
so we might have some different market conditions by then. I do respect the Amazon.
I'm going to go watch Altered Carbon to get my analysis.
That's right. A couple of the quick ones here, Matt. Johnson & Johnson, a couple of weeks ago, the FDA said that they were going to put that vaccine on.
Wait a second. What did we say last week, T? When you were concerned about this, I was like, okay.
Non-story. They're going to come out.
Non-story.
And this is what they did. The FDA and the CDC came out and said they're going to revoke their earlier recommendation to pause it and that they can start issuing this J&J vaccine again very soon.
So they paused for a week, right? To give it enough time for people to think they did something,
I guess, and also
okay, we're good. We're good. We don't need to talk. No, we're good. We all understand what happened.
I think we know exactly what's going on here. And then the last one for me here, Netflix. Last night, I didn't watch the Oscars, Matt, but they took home the most awards.
You and nobody else either.
I actually did not know the Oscars occurred.
Why would you?
I had no idea.
I didn't know. I read through the titles of the winning.
I didn't. I know none of those movies.
Ma Rainey's Black Bottom. Didn't know.
We're done.
My Octopus's Teacher. Mank. I'm sure some of them are good. I'm sure. Well, they won awards, right? So I'm sure.
I watched Cliffhanger the other day. Mm-hmm. That should have won an award this year.
I didn't see the Oscars. I don't know most of the films, but that's not very uncommon for me most years, by the way. I don't usually see stuff when it comes out.
It's all emotional stuff this time. But remember the scene in Cliffhanger where he's trying to hold the girl?
Yeah.
You tell me any scene in those movies rivals that.
Okay, that's the only scene anybody remembers in that movie.
The thing about that scene,
true.
That's not true. I want you to go find that scene out there. And I want you to look at the old guy in the background having a totally inappropriate facial expression for the given circumstance in the movie.
And also think Bitcoin trying to hold support. Like think that too.
Hold it on.
Just think that too. Just
see, you do see a lot of things in charts. You're now going to see whenever the moving averages roll over, it's going to be the cliffhanger scene.
Dude, the glove's falling off. Hold on.
Listen. Back in my gambling days, but I mean that's why I love the stock market. I don't even bet on football anymore. I used to bet on the Oscars. I mean, just because I like to bet on anything I thought I had an edge, but I didn't even know it occurred now. You know why? Because the stock market's amazing. Because I can't hedge my Oscar bet as they walk out. I can't buy protected puts. I can't cash flow my Oscar bet. Like trading's amazing. Trading is amazing.
I would much prefer trading the financial markets over betting the Oscars. Yes, I can agree with you on this point.
I want no part of this conversation on the Oscars.
One takeaway on Netflix, I'll just say.
Yeah.
It's a reminder to me of how smart they are for committing to original content. Even though I don't know those titles, I don't recognize them. This is what Netflix does. They just make new stuff. They keep pushing, they keep making new stuff. It was the most awards this company's ever won at that awards show. So anyway, stock's still down on support after that earnings analysis.
It's a doji. They didn't care about the Oscars either.
Market didn't care about it at all.
No.
All right, last here, just one quick one, Matt. Viacom, the only upgrade that caught my attention here today, because obviously this one's been in the news. They got to upgrade it to neutral from Moffett, and I actually think that's probably the right ranking after all the craziness that's happened in the short term. A neutral ranking until you get price action to play itself out. It'll be an interesting to watch as we're coming up on that earnings report.
They upgraded
from sell to neutral.
What they do? Did they put a sell like literally last week?
I don't know when the sell was.
I honestly would like to know when this sell occurred, because I'm willing to bet this sell occurred somewhere around here. They didn't have a sell up here, and they certainly didn't sell. Like, I don't know.
They put a sell. I got you right here. March 25th. March 25th is when this firm put a sell on. It was in the middle of all of it, and they just upgraded to neutral today.
I don't have an issue with them.
Yeah, I think they were respecting volatility.
I don't have an issue with them.
Seeing it. Yep. All right, Mark. This is what we got here for the rest of the show here today. We're going to now.
I think it's accurate though for Viacom.
I think neutral's the
right. Viacom's tackle 25 component, and in the face of the volatility, you know, I was thinking about tackle 25, analyzing, you know, how this would impact that. You're talking about a stock that's still positive on the year.
Yeah. Yeah.
That's amazing.
I mean, it's crazy to think, right? It's still positive.
Like, if it was down 30%, I probably would have done something and adjusted the tackle 25. But like, it's a great company, and it got caught up in some really nasty hedge fund stuff. So I do think neutral is the right ranking. I do think interest on the 200-day moving average as it builds is correct as well.
I agree with all of that analysis. All right, let's go into our last segment here on a Monday, you know, light news day and a very busy anticipated news week. But
yeah, light news today, but big week though.
Not going to be a light
big week.
Marky, the commodity corner. This is a new segment that we're going to be working on Mondays, you know, kind of rotating things in and, you know, having different ways to break things down, analyze them, have some fun. And you're the commodity guy at Tackle Trading. You've done the commodity report now for what, 2.5, 3 years? I mean, I don't know exactly when.
And even before that, like even before I came to Tackle Trading, about the only thing I was ever interested in was oil and natural gas and, you know, the precious metals. I've always been fascinated by commodities. One, because they're amazing cash flow, the ability to cash flow on commodities. Two, I like just the general macro nature, where, you know, you got these big themes that develop, and those big themes can play out over time. And when trends get going, they can be very powerful in commodities and support and resist. I just love commodities. I think it is an amazing, and it's been a good year, right? It's been a good year in stocks. It's been a good year in commodities over the last 12 months as well, off those COVID lows. I mean, the percentage gains in silver off the March lows, the percentage gains in oil off those March lows. I mean, these are amazing gains. And I think there's still room to run. But what we're going to highlight, and so every week we're going to highlight a trade or a big theme or something, you know, and we talk about commodities all the time at Tackle Trading. Like, it is just one of those core things. I mean, Matt's been great on gold, made me money on gold in his analysis over the last couple of weeks, and just love the world of commodities, and there's lots of opportunities. But today we're going to talk about oil, and if you'll pull up the crude oil chart, because and we're going to specifically talk about energy stocks. Now, when I analyze commodities, and I don't care if it is a gold mining company, I don't care if it's FCX, the copper mining that does a little bit of gold mining, I don't care if it's a silver mining company, I don't care what the company is, I always start my analysis from a top-down perspective on oil itself. And oftentimes when I trade short-term, it's always based on technicals. I'll look at support, I'll look at resistance, I'll look at trend. I mean, it's just like, if I have a short-term trade, it's going to be 100% technical analysis 100% of the time, because it should be, right? Like, if you're going to be in a trade for a week or 2 weeks or even a month, or somewhere in the swing trading range, I'm going to base it on technicals 100% of the time. But every once in a while, as I'm analyzing the market, I'll develop a theme. I'll develop like a thesis, if you will, on an underlying commodity or an underlying stock. A great example of this, and I wasn't the only one, is the reopening plays like last year. I mean, how many times did you hear me say Cinemark, Cinemark, Cinemark when it was getting killed? It's because I had a thesis on the cruise ships, on movie theaters. I had this thesis, and I was like, I'm betting on vaccine development. I'm betting on a return to normalcy. And so I'll develop this overarching thesis on a subject. And, sometimes I'm right, sometimes I'm wrong, but those thesis bets, and that's where I'll oftentimes go to my long-term position trading. I'll go to my long-term investing. If I believe in a company or I believe in a story, a thesis, if you will, however you want to phrase that, then I can be very, very stubborn, as long as nothing alters the thesis, right? Like in the reopening play, you had like a COVID variant that was killing 1 out of 3 people, right? Or if the vaccines were duds. I mean, things can change, and you can't be so stubborn you don't change. All right. So with crude oil, I have been very bullish on oil. As a general rule, always from a cash flow perspective, because one of my overarching themes behind oil has been that the Saudi Arabia, after the disaster, and if you pull up a multi-year chart map, after the disaster of them trying to fight the frackers, and Matt, can you give a little insight on them fighting the frackers? Matt might have stepped away there for a second, but
Are you talking about Saudi Arabia fighting the
yeah,
frackers?
I mean, back in 2015, 2016,
Sure, they went to war with them pretty much.
They went to war. Like, and if you pull up like a multi-year chart, so what Saudi Arabia did, and it's important to understand this backstory because it gives you bullish context to one of the most important things in oil. They tried to, as fracking became more and more popular, Saudi Arabia is like, we're going to put these people out of business, and they started a price war. Well, it failed. Oil plummeted, and they changed their tune after that. And you'll hear me joke when I'm talking commodities, the Saudi princes have your back, because they philosophically made a change in their meetings, in their dialogue. I read so much material during this time period, and they shifted. They're like, okay, we're not going to do that ever again.
Well,
they're not going to do that.
Can I speak to that very quickly?
Absolutely.
Yeah, this is when they started it, and I'm not going to give all the context of what happened during the great oil war of 2014 through 2016, but it was fascinating to see the Saudi response as oil was down here. Mm-hmm. And throughout this entire rundown, the level of confidence Saudi Arabia had was quite amazing to witness. The amount of confidence they had here was well deserved since they had zero. See, what they thought they were going to do in here is bankrupt the American fracking companies. What they don't realize is we'll send those roughnecks home, but we're not going to shut down the pipelines. And so as we sent everybody home, and we did, we lost 300,000 jobs in this year. But you know what also Saudi Arabia did? Went into $100 billion in debt, sparked an economic situation for their country to where they had to borrow from their pensions, which they'd never done. When you take money away from the Saudi princes, Mark, they're not very happy. Nope. They shifted their tune right here because they felt they were going to be in a much better position as the American and the Russian fracking companies were struggling, that they were going to be in a much better position. The entire assessment was that $50 per share on oil, that these American fracking companies could not be profitable. Well, what Saudi Arabia didn't realize is that America, Russia, and a lot of other countries could still be profitable at about $40, $42 a share. And even when it went down to $30, Saudi Arabia didn't have the edge that they thought they had when they started their stupidity of a war against the American frackers in 14. And it did shift them, and it did scare them, and they do not want to see that again. Yeah, no, and so like
And this is one of the things, like when you're developing theses in a market, the understanding, it's like if you were to dive into an individual company and know all, you want to know all the details. If you're going to long-term invest, you don't want to know the details. You want to know, if the CEO's owning shares or if they're selling shares, their growth numbers, their products, all kinds of things. But that backstory on Saudi Arabia is really important as a bull to give me confidence in holding oil positions. That philosophical change. And they have reiterated that time and time again. Now, there was a 6-week spat with Russia at the height of COVID last year where the Saudi princes where Saudi Arabia got a little uppity. And they quickly turned their nose. They're like, all right. So there's a philosophical commitment to keep that supply at a moderate level. Now, one thing you know about oil is if the oil gets into the high 70s and the 80s, Russia will open up the pipelines, but we're not there yet. Now, so that's one of the underarching thesis of why I still believe in cash flow from a bullish perspective of oil. But more specifically, tying into that reopening, everybody expects that the U.S. economy is going to be very, very robust. I mean, some of the figures that are showing about GDP growth this year, because there's two sides to the oil equation. There's the supply side. Well, you've had a lot of wells shut down in the U.S. The Saudi princes have your back. There's moderation on the supply side, but now it's over to the demand side. And we still haven't even come close to experiencing a full economic reopening. In fact, over the last 5-6 weeks, which has weighed on the price of oil, you have had a ton of negative COVID headlines, not necessarily here in the United States, but around the world. You had 5-6 weeks ago, Europe locking down again, Great Britain locking down again, worries about vaccine distribution. You've had headlines from around different emerging markets and even developed markets, Japan, India, Brazil. You've had a ton, just a metric ton of negative COVID data from news headlines, from different parts of the world. And got to understand that oil is a globally based thing. It's not, the U.S. It's not just the U.S. It's the world. It's what is demand around the world. And in the face of tremendous negative headlines on COVID, oil stuck a support level for 3 weeks. It stuck a support level for 3 weeks. And whenever you've had a really strong move, and the move from the election up to the start of March, that was a massive move, like percentage-wise in oil, you really didn't have that big a sell-off. You did not have that big a sell-off, and you developed a nice little support level in the face of extremely negative COVID demand headlines from around the world. So in the face of a lot of negativity on the demand side, you stuck a support level. Now and once again, I have been betting for a year, placing trades, if you will, investing, position trading on reopening themes, reopening plays. One of the reasons I still believe, particularly from a cash flow perspective, oil and oil energy companies, and we'll get into oil energy companies here in a second, is that I still think you got juice on the reopening. When those COVID headlines turn, and Japan and India and different areas of the world, when those headlines reverse and they become positive headlines, well, you take this sentiment weight off of oil. You take this negativity surrounding the demand side away from oil. And as long as Saudi princes and U.S. production, which we have to remember, during the last year, a metric ton of wells got shut down. In fact, during the height of COVID in March and April and May, every week that rig count that you saw dramatically decline. I mean, there were weeks that were just shutting them down massively. Well, you can't just flip a rig overnight. We are still nowhere near the production numbers in the United States on oil today that we were a year ago. And especially 14 months ago. And so the supply side equation is really, really juicy right now. All you need is that demand kicker right now for upward movement. Now, even without the kicker, the catalyst, even without the catalyst, you should see stability, because you have, in the face of negativity, without that catalyst, you have saw stability. You have a nice consolidation pattern formed on oil. And so now let's get to energy companies itself. So that's part of my thesis. Demand reopening still got legs to go, held up well in the face of those negative headlines. And we're going to start seeing it this week and next week and the week after, as oil company after oil company after oil company starts reporting the results. Now, this will be the first quarter in which they're reporting results with oil at elevated prices over the last year. So they've reported in recent, the Exxons, the Apaches, the Oxys, all of your different oil companies have had reports, but that's when oil was depressed in prices. This is going to be the first quarter of earnings reports in which you get reports where oil for the first quarter was, high 50s, 60s for most of the quarter. And so you're going to get the first quarter of results with oil at elevated price levels. Now, one of the theses, and I don't even know if this is a thesis, I think this is just kind of a fact, is that during the last year, when oil was getting obliterated near the bottom, when oil was at these ridiculously depressed prices, in order to survive, companies had to do massive, massive cost cuts. They had to, out of necessity, they had to, because if they didn't, you saw some of the silliness of, can Exxon Mobil go bankrupt? Not some low-level producer. Can Exxon Mobil go bankrupt? I mean, that was the type of fear that was out there.
And Mark, quite frankly, it was deserved.
Mm-hmm.
It was. The things we were seeing from a fundamental perspective destroys companies. Literally destroys companies. They cease to exist. Now, with Exxon, did we ever get to that? No, we didn't. But we certainly got into the, how is Exxon not going to cut their dividend mode?
Mm-hmm.
Oh, absolutely.
Right. I mean, we certainly were all over that, and we were wrong. Exxon not only survived as expected, but they maintained dividend, which I think was kind of unexpected,
Mm-hmm.
given the gravity of the situation that we all were faced with last year, not knowing the depths of the problem, and not even knowing how far reaching this problem was truly going to be around the globe, and how that would impact a global company that does business in the commodity market like Exxon Mobil. It was just a very, very nerve-wracking situation. So even though, I and Tackle never really got into the, oh my goodness, the dire mode of Exxon dying, like all of us in both public and private conversations were extremely concerned about Exxon's ability to maintain their dividend.
And that dividend is critical, because when you cash flow energy stocks, the dividend plays a huge, massive role in that cash flow strategy, because it's often quite juicy. And so, I mean, whether they could maintain their dividend, whether it was Exxon or any, that was a massive storyline in the energy space.
Mm-hmm. Okay.
So you have companies that have had to cut their costs. You got elevated oil prices. Now, do you get a jump up? Economy reopens, oil goes to 70, goes to 75. We'll see that on the techno. Momentum's a funny thing, right? When it gets going, it can get going. But even without that, that's a bonus to me as a cash flow trader, as someone who sells calls on companies I own, who sells naked puts at lower prices if I don't own that company. Energy companies with dividend, I see a totally stabilized market with a potential upside kicker. to it if that reflation trade gets going. And I see energy companies that have a profitability structural because of everything that's happened in the last year, that they're not going to have that dividend. Oh my goodness, do I have to cut? I think you could start seeing dividend hikes. And so from a value perspective, and a true value, both, energy is always the value in the value space, but, just genuine value, cash flow perspective, I see opportunity in energy stocks. Now, if you want to wait, and I'll let you guys go for specific technicals, right? But that's why I still believe, that totality of everything is why I have not trimmed my energy positions in the last month. No one loves downward price action, but I'm stubborn when I have a thesis, and I think the thesis is solid from a cash flow perspective. What do you guys think?
Well, I mean, let's talk about the two big ones here this week that come out and report earnings, Exxon Mobil, Chevron. I mean, I don't think that's going to impact your analysis here, Mark, but it's something I know that for me personally, I am eagerly anticipating, wanting to see what these guys do post, because a lot of the thesis will learn how much profitability they did have in Q1 if they had it by this week, when these two companies do post up numbers. So that's one thing I'm anticipating myself. I'm an investor in Exxon. I own it. I've not gotten rid of it. I'm not going to get rid of it. I'm a believer of what they can do over the next year or two, as they've come off these really depressed prices at the low points, and they did reaffirm those dividends. I want to know about the profitability. Did they turn a profit this quarter? What are we looking at from that perspective? Short-term charts obviously have not. They've got some things to work through, and they've got a lot left to be desired in that regard. They've been stuck in the mud here for about 5 weeks. Long-term, though, that's a level that they're fighting for support on. So I'm 100% a believer in, the idea behind this. There's still some unanswered questions that we'll learn from these earnings reports, which I'm looking forward to. Matt, what about you?
I think they're in an environment where I think people, investors and traders, should be a little excited if certain things play out. This is a space where, when you're looking at crude, you're seeing crude catch up all the way to pre-pandemic levels, right? Mm-hmm. And that's a lot of my stabilization argument is crude will stabilize to pre-pandemic levels. Now, whether or not we catch price appreciation, breakouts, to me, that's a secondary factor, right? Because I'm not talking specifically about crude trading and breaking out of $64, for example. But when you're looking at crude, again, pre-pandemic, post-pandemic, price has recovered. When you look at the energy space itself, price has yet to recover. It's one of the few spaces in the market that has not recovered pre-pandemic. Now, even before the pandemic, if I go back in time, you see an environment that hasn't exactly been robust and hasn't exactly been great. And so the stabilization argument for crude oil in general is simply energy prices catching up faster because crude achieved that stabilization and crude achieved that pre-pandemic at a faster pace than, say, the energy components did. So I do think the entire argument that Mark's making here is predicated on the fact that energy will catch up as crude oil has stabilized. Is that correct?
Oh, I mean, that definitely plays in. I mean, listen, I still I always will like a chart that has room to run, right?
Yeah, but in general, this is what we're talking about.
Yes.
Right. And you're discussing the reasons why you still like this, correct? Because it has shown a little bit of weakness, a little bit of chinks in the armor, to a certain extent over the course of the last couple of weeks. It's been a little bit of a, obviously fallen out of favor, but technically challenging environment for energy in general. Mm-hmm. But I take a look at, say, Exxon Mobil here, Tim, the biggest component of the space, one of the major players in the marketplace. You're at a price threshold right now where I do think you're excited. You're excited for a couple reasons. Number one, you got a double bottom right here in that 55 range. Technically, that's pretty solid foundation. That's also occurring at the previous resistance over here at 55. I like that. Obviously, we got a catalyst coming out this week that can spark some momentum one way or the other. And Exxon Mobil is not one of those stocks that's going to fly on earnings typically, right? It's just not a company that's going to go up 10% on earnings. But you could see a scenario now. Obviously, if the movement's down, I mean that scenario we're not looking to short, right? That's more of a how do you protect your investment, Tim? Scenario, right covered calls or whatever the case might be. How aggressive versus conservative you want to be in trade management there. But what I'm talking about is this right shoulder here, right north of 57.5. If you get that positive catalyst coming on this weekly chart, you're in an environment where you could break out of that 57.5, 58 level, see some really good price appreciation into 62. And then if you do see that catch up argument, you're talking $70 pre-pandemic. And so you're at an environment where I do think the investors are a little bit cautious, maybe even hopeful, right? Hopeful in the sense that, please, Exxon, please, this is your moment. Please, Exxon, this is the time. If there was ever a time, Exxon, now is that time, right? That's what the investors are doing, right? But if you're the individual that isn't an investor in Exxon, obviously we're not going to have a trade coming in earnings on Exxon, but it is a company that should be on a watch list. If we do get a positive catalyst out of earnings, couple that with technically breaking out of 57.5 by 58, there's not a lot that's going to stop this stock, in my opinion, technically or fundamentally, until you get into a minimum of 62.5, and then it's ball game up until 70. So I do think and I like this time frame, Mark. We're talking about something that literally could transpire this week, putting it on people's radar. Not just Exxon, you can do the same thing with Chevron, right? But so that is the argument. And I do think this week's going to play a big role in this stabilization argument. It's time for earnings out of energy companies are not going to be good. They're not going to be good, but we need to see progress. This economy has been reopening for months and months and months and months. We've seen positive economic data coming out of specifically the US and China for months and months and months and months. And those are the two biggest components when it comes to why crude and why energy does what it does. And so I do think it's time for us to see the data of a path to getting back to profitability. And so I do think you're in that moment where a catalyst could spark something that maybe rivals this type of price appreciation that energy had and that Exxon had specifically. So I think you're in a good environment. I think you're technically and fundamentally in the right moment, right environment as well. Now you're just waiting on those catalysts out of earnings. And this is the week we've been waiting for. This is the week we've been talking about with energy, for the last 2 weeks. Anytime data came up on anything relating to energy, even earnings reports last week, I'm like, so what? Those are refinery companies. We got to see Exxon. We got to see Chevron. We got to see those major drillers out there. Some oil and midstream components have been doing fairly decent. Can these big players do it as well? This is the week we find out, in my opinion.
Very timely analysis here, guys. Mark, anything you finish up with here?
No, I mean, it's one of the things. There's so many ways to approach the market, right? I mean, you can just be a pure technician, trader. That's great. Like, you can develop your thesis. You can find areas of the market you love and try to develop expertise. There's just so many ways to approach it. I mean, I just wanted to share, how I approach oil, and because you'll hear me say all the time, I like oil, I like this. Those were some of the reasons why.
Good. Fantastic, guys. That's our commodity corner. And, Mark is going to be highlighting different areas in the commodity markets, how to trade them, why he's interested in them as they pop up over time. Fantastic job there, Mark. I appreciate it. And by the way, guys, that's our show here for a Monday. We're going to start wrapping up. Going to be a real fun, real busy, real action-packed week here on the Halftime Report. Make sure you come back and join us on a daily basis. If you've not done it yet, click that subscribe and the bell to know so that you know when we do go live at 12:30 p.m. Eastern each and every day. Maddie, final thoughts from you as well.
No, it's going to be some fireworks this week, in my opinion. We got a tremendous amount of earnings reports out there. I believe we got 180 S&P 500 components, just chock full of major news all through the week. So definitely stick with us throughout the week as we break down that in the halftime report for our community over there at Tackle Trading. And if you are new to Tackle Trading, obviously click the subscribe button for the halftime report. We really appreciate that. It helps us get the message out there a little bit more every day. And also, if you are on the go and want to stay on top of the market on a daily basis in less than 10 minutes, especially on a week, Tim, you're going to have a fascinating week in the huddle, breaking down what 5 stories on a daily basis you're going to be talking about in the huddle. I'm fascinated. I love the huddle. I get to listen to it in production every single day. It prepares me for the market. It literally has shaved. I'm not kidding, guys. I track this stuff. It has saved me 23 minutes a day so far. And that's 23 minutes a day that I'm trying to figure out what I want to do with. So I appreciate that, Tim. It's saving me time. I know it's saving other people time. It is an absolute great way to stay on top of the market every single day with us at Tackle Trading, your trusted source for all things market-related commentary. So definitely check out the huddle and make sure you subscribe to the huddle so you can get those automatic downloads on a daily basis. And it typically does hit the wire right there at about noon Eastern Standard Time, right there midday. And so you have an opportunity to listen to the huddle and then come to the halftime report and break down that news in the market with us in the halftime report every day.
Plus, you get to hear Tim's sexy huddle voice.
We're not doing this again.
Ooh, do it, Tim.
We're doing it.
One of these days, I'm going to have Tim do the huddle in just Alex Jones impersonation.
All I know is I heard Denzel Washington and Tim Justice used the same sentence
Tim,
last week.
Tim,
So.
Tim, I'm telling you right now, if you did the huddle in Alex Jones impersonation, it might be the funniest thing in my life.
Apple computer. And then hold on, I got to get it right.
No, that wasn't it.
I don't know if I got the Alex Jones anymore. I've been doing.
You got the copy. Come on, you got the copy.
I got to get the Alex Jones voice back in my chest. Got to fill in my chest.
Well, it's not as easy now that you don't smoke.
That's right. It was much easier.
You've cured the Alex Jones impersonation.
Now I just got that Mickey from. I can do.
Yeah,
Mickey
now you just got the old. Yeah,
I can do Mickey. All right. Yeah, I love the huddle, guys. Make sure that you are downloading and subscribing to the huddle. Get it each and every day right around lunchtime, on the East Coast, right before we go to the halftime report each day. Guys, we're out for today.
Wait, with programming note, onboarding tonight for new members. If you want to know all of the things that Tackle Trading members have, all of the different things we have at Tackle Trading, Coach Frank hosts an onboarding class to expose you for new traders tonight, 7 p.m. Eastern, here on our Tackle Trading YouTube channel. And then at 8:30 Eastern, we have the Step System Mastermind Group. So Step System Mastermind Group tonight at 8:30 Eastern. You can find that on the events calendar at tackletrading.com.
Fantastic. Onboarding tonight, and find any of our programs on that events page. Good reminder, Mark. I appreciate that. All right, Team Tackle, we're out for today. Have a